Hey everyone, it's Phoebe, and welcome back to TradingKey. Lately, geopolitics has been hogging the headlines, but if you're trading the AI sector, you would have witnessed a massive structural shift. On March 4th, Nvidia CEO Jensen Huang put $4 billion into the optical interconnect world, with $2 billion to the company we're focusing on today, Coherent. The other half went to Lumentum, and if you caught my breakdown on that, you would have seen that LITE jumped 28% in just 1 week. But here's the kicker. Coherent isn't just another component maker. In this ecosystem, Coherent is often the platform player. They own the materials that companies like Lumentum actually buy to build their products. Today, we're looking at why Nvidia is essentially pre-ordering the entire optical supply chain and why Coherent's vertical integration might be the most undervalued moat in the AI trade. Before we dive in, just a quick reminder that this is for research and sharing purposes and does not constitute investment advice. Understanding the logic is always more important than the trade itself. Coherent's 3-layer growth engine. To understand Coherent, let's stop looking at them as just a laser company. They are a 3-layer business, where each layer is hitting a major inflection point right now. First, you have the data center and communications arm. This is the primary revenue driver, up 34% this past quarter. While others are picking sides in technical routes, Coherent is tech neutral. They support silicon photonics, InP-EML, and VCSEL. They also dominate the long-distance interconnect market, a niche Lumentum hasn't even touched. Second, their industrial laser business. Many investors dismissed this as a drag on margins, but they missed a critical detail. Coherent is a primary supplier for ASML's EUV machines. When the semiconductor equipment cycle recovers, which management expects by the second half of 2026, this seemingly boring business becomes a massive tailwind. Finally, there's the materials layer. This is the foundation. They own the indium phosphide and silicon carbide substrates that the entire industry relies on. While other companies have to shop around for parts, Coherent builds everything from the raw materials to the finished modules. This means no matter which way the industry leans, Coherent wins. The 6-inch advantage cutting costs by 60%. Coherent's real secret weapon is its transition to 6-inch indium phosphide wafers. In semiconductors, bigger is always better because it's cheaper. Most of the industry is struggling with 3-inch or 4-inch production, but Coherent just hit mass production on 6-inch lines in Texas and Sweden. Now, this isn't just any minor upgrade. A 6-inch wafer provides 4 times the output of a 3-inch wafer and slashes the cost of each chip by over 60%. By the end of 2026, half of Coherent's production will be on these high-efficiency lines. When Nvidia hands over $2 billion, they aren't just buying parts. They are investing in a company that can actually scale AI infrastructure without bankrupting the industry. The scalpel versus the tank. If you're deciding where to put your money, you're choosing between two very different financial profiles. Think of Lumentum as the scalpel. It's a clean, debt-free play with a massive direct exposure to the new co-packaged optics trend, better known as CPO. It's light, it's fast, and the stock is highly elastic. If you want a pure AI growth story for 2026, Lumentum is the obvious pick. Meanwhile, Coherent is the tank. It's massive, vertically integrated, though historically burdened by debt. But the story has changed. Under new leadership, they've dropped their debt leverage from 2.3x to 1.7x in just 1 year. They are selling off non-core units and paying down debt aggressively. Analysts are projecting that Coherent could see 30 to 40 cents of EPS growth by 2027, just from interest savings alone. That's a profit engine Lumentum doesn't have. Core difference between OCS technology. Here's one last thing most investors might miss. In the race for optical circuit switching, there's a quiet tech war happening. Lumentum is betting on MEMS, which is a mature and proven technology that uses tiny mirrors to reflect light. On the other hand, Coherent is betting on liquid crystal. It has 0 moving parts and consumes significantly less power. Lumentum is offering the tried and true method, while Coherent is offering the high reliability choice. Right now, Coherent's OCS order book is already overflowing, with a book-to-bill ratio over 4x. We don't know which tech will win long-term, but Coherent has already secured enough customers to keep their factories running through 2027. What's the final verdict? If you're looking for a quick flip, Lumentum's agility might be more attractive. But if you believe AI infrastructure is a multi-year build-out, Coherent is the play for the bottom of the stack. 2026 is their year of trimming. They are paying off debt and ramping up their 6-inch manufacturing. The real harvest comes in 2027, when 1.6 terabit transceivers become the industry standard, and Coherent is the only company producing the core chips at a 60% discount. So, are you taking the sharp scalpel or the heavy tank? Let me know in the comments. And if you want the full breakdown of Lumentum to compare the two, make sure to check out our previous video. Thanks for joining me today. If you found this video helpful, remember to subscribe to TradingKey, give this video a like, and share it with a friend who might just benefit from learning this too. With that, I'll see you in the next one.